Hey everyone, it's been a while since I did a video on crypto and things has been really quiet in the crypto market right now. And the crypto market has yet to recover from the recent 50% correction, and Bitcoin can't seem to cross the 40,000 mark and hovering around the mid $30,000 mark for I think over the last 2 months. And I thought this is a good time for me to do an update on what's going on. What am I investing in? Am I still investing in the crypto market? Am I still buying more? And in one of my last video, I actually shared that we could be in a bear market, but no one can consistently predict where the market is going to go short term. So I said that I have a strategy to cover both ways if the market is going up or if the market is going down. And in this video, I'm going to cover that strategy again. I'm also going to share with you why I personally think this is a great time to buy more, and I'm secretly hoping that prices don't go up so soon so I can keep buying. And I'll also be sharing some of the different altcoins in my portfolio that I'm currently accumulating. So before I go into it, I really appreciate you hitting the like button for the YouTube algorithm, and if you're new to this channel, welcome. Every week I post videos related to marketing, investing, and productivity. This is the 3 areas of my life that I'm trying to master. I review marketing hacks that I've used to build 7 to 8 figure businesses online, what I'm currently investing, including cryptocurrencies, and productivity hacks to do more with less. So if you're into any of that stuff, please consider subscribing to this channel. Now, I'm going to start off by sharing first on what season we are in right now and how by knowing the season, you can actually take advantage of it. Now, we all know that cryptos like Bitcoin runs in cycle and no one can constantly predict if it's going up tomorrow, it's going down tomorrow, or next month. But you can roughly feel the season we are in, and in investing, there's always a greed and fear season. Now, generally when the market is greedy, you know that it's overhyped and you need to proceed with caution. And when the market is fearful, and that's when you know when it could be a good opportunity to buy more. Now, I'm not asking you to time the market, but you get a rough idea of the season we are in. And of course, this is easy to say on hindsight, but for new investors and seasoned investors, it's easy to say, oh, you know what, when the market is greedy, I need to sell, or not, I need to proceed with caution, and when the market is fearful, I need to buy more. It's honestly very easy to be influenced by the noise around when you are in it. Right? I've seen people who are seasoned investor, because of all the noise going around, that seasoned investor became FOMO and FOMO more in and buy more when it was overhyped. So you want to be very careful with this, being careful with all the noise that is going out in the market. And this is also the reason why if you are new to investing, you might be wondering why every time you buy something new, it falls right after you buy. And this happened to me when I first began my investing journey. Now, when I first bought my first few stocks, right, the first few stocks plummet like 50%. When I bought Tesla for the first time, it plummeted 50%. And when I first bought cryptocurrency like Bitcoin and Litecoin in 2017, 2018, it also fell by more than 80%. And so I realized that there's a reason why, and it's actually part of psychology. The reason why every time you decide to buy something, especially if you're a new investor, and then it fell, is because you are usually influenced to buy it because of a lot of hype in the media or your friends telling you about it. And usually at that stage where everybody's talking about it, on Twitter, it's trending, even your parents are asking about it, it is usually overhyped. And you know that there's going to be a crash or a correction coming. So this happened to Tesla recently. There's a lot of good news about it. My circle of friends were all talking about Tesla. I think somewhere last year, every YouTuber was hyping it with Tesla going to S&P and all the record-breaking goals that they're hitting. And guess what? It fell more than 30% from all-time high, and then it became very quiet suddenly. And I'm not saying don't buy into Tesla. All I'm saying is that during this period when it's very quiet, I'm just secretly buying more every single month. So if you bought Bitcoin or any other cryptocurrencies during the period of March to June, same thing happened, right? People were trending it. I remember once I saw it on Twitter. That was when I became wary, where on Twitter, Bitcoin was #1 trending hashtag in Singapore. Friends on Facebook, especially Facebook, if you start seeing a bunch of people on Facebook talking about it, you know that we are in a season of like overhyped. Everyone was talking about the altcoin super cycle, and everyone sounded super sure that we are in the altcoin cycle and that the bull run is not ended. But honestly, I wish that would happen because I have a huge holding in the crypto market. But I had my reserve because of the fact that everybody is talking about it. And because I've been through the last bull run in 2007 and 2018, it kind of sounds very familiar when every group is talking about a new coin, and back then there was ICO, now there's IDO and all kinds of stuff, and everyone was kind of like shilling all the shit coins. And I knew that the biggest warning came was when my friend told me that his dad, his father, I forgot what's his father's age, but definitely not someone young, was asking him about how to buy Bitcoin. And that should be like my warning sign, okay? Now, I didn't sell because I don't believe in trying to time the market and trying to sell the market at the top. Because a lot of times, if you do that, right, and if you are wrong, right, and the market were to go up even further, you will miss out on a lot of gains. And I will cover more on that just a bit. So, but I did stop buying out of caution, right? During this period of overhype, I kind of stopped buying. I didn't sell anything, but I stopped buying more. And then it fell 50% just 1 or 2 months back, and some altcoins even more than that. And now it's just all quiet. And there's very little movement, no hype, and that's the reason why I'm now buying again. You see, after Bitcoin crashed in 2018, there was little to no movement and no hype for almost 2 years. Honestly, this was the best time to start accumulating more during the period of 2018 to 2020. I actually bought more Bitcoin. I wish I bought more, right? But I was accumulating as the market was a bit quiet. And if you have done that, your portfolio will have 10x to 20x when it hit the recent all-time high of $60,000. Which is one of the reasons why I'm not so concerned that it went down 50%. Because if you had 10x, 20x, and it fell back by 50%, you are still up at least 5 to 10x. So what's my point of telling you all this? I believe in the next 6 months to 1 year, it's going to be quiet. Now, some people may say otherwise, right? But again, I don't try to predict where the market is going. Right? Some people say that it's going to fall even more. But here's what I can tell you. I believe now is a good time to start to acquire more quietly at a low price before the next run comes again. And here's what I know. I don't care whether is it going up or is it going down next month. All I can tell you is that cryptocurrency like Bitcoin is here to stay, and we still have a long way to go. So once again, I'm not telling you to time the market. No one can consistently predict where the bottom and where the top is. And the truth is that investors actually make more money just by buying and staying in the market and doing nothing. So for example, in the 2017 and 2018 bull run, I bought Bitcoin at the $10,000 and $15,000 mark. And it was already quite peak, right? Because before it went to $10,000 to $15,000, it was at about $1,000 range. And so during the peak, right, it went to $20,000, and then it went on to had a crash by more than 80%, and it dropped to $3,000. Now, when it went to $3,000, right, I bought at $15,000. Of course, I made a huge loss. I didn't sell, and I did bought more. So my dollar cost average price of Bitcoin is even lower, which is right now, I don't even care that it did a 50% correction. And of course, we went to 60,000 all-time high. My investment really grew by at least 5x, even with the recent 50% correction. But here's what I want you to tell you. Those Bitcoin, right, of course, because I bought more as it goes down, so my dollar cost average is of a certain price. But even those Bitcoin that I bought at $15,000 at like the peak, right, it still went up 100%, even with the 50% correction recently, because I held and did nothing. So I want to share with you an investment lesson that I actually learned from the Bible. In the Bible, there's this book called Ecclesiastes. In chapter 11, it says that if the clouds are full of rain, they empty themselves upon the earth. So what does this mean? It means that an investment will come to maturity in due time. See, I believe that crypto is still early, and maturity is not here yet. But maturity will come. And when the maturity comes, the clouds are full, it will rain. So we just need to be patient, right? When the clouds are full, it will rain. We don't have to kind of pray that it rain now. We don't have to try to bet whether it's going up or going down in the next month. And so this comes the following verse, right? The following verse actually says that in the same chapter, it actually says that and if a tree falls to the south or the north, in the place where the tree falls, there it shall lie. And what this really is saying is that don't gamble on which way the tree will fall. Don't try to bet if it will go up or it will go down, right? So it sounds like a stock market. And you want to bet on the fact that it will fall and it will remain there. So what this means is that you want to focus on the long term. Bitcoin and cryptocurrency will become mature one day, and they are here to stay. So just like the tree, it will fall, it will remain there. You want to bet on the fact that it's going to stay there, it's going to fall. You want to bet on the inevitable, something that is sure to happen. ARK Invest long-term price target of Bitcoin is actually 500,000 per Bitcoin. And I honestly believe that's possible. And if that's true, there's still 10 times from now. I'll link the study to that in the description below. So if Bitcoin is going to be at $500,000, it doesn't really make a huge difference if I buy at $30,000 now, or if I try to time and wait for a while for it to go down to $20,000. But it will make a huge difference if you are waiting to buy and waiting for the right time to enter and then missed it. So the following verse of the same chapter actually said that he who observes the wind will not sow, and he who regards the cloud will not reap. And what it's simply saying is that if you're waiting for the perfect condition to invest, you will not invest, right? You're waiting for the right time, the best time to buy, you will not buy, and therefore you will not reap any rewards. So what's my strategy now? Not long ago, I actually met a rather wealthy friend of mine who manages a multi-million dollar portfolio. And she actually is the first person who convinced me to invest systematically instead of emotionally. And you see, once again, if you're trying to time the market, right, it's a lot of emotion, and instead you want to invest systematically. And she told me that the secret to her wealth was that she would invest a fixed amount of money every month at the same day, no matter what the market conditions were. And she started doing that in, I believe, in her like late teens, when she started doing that when she was 14 or 15 years old, and she just kept investing. Of course, the amount grew bigger as she started to make more money, but the point was that it was out of habit, it was investing out of a system, and she doesn't care whether the market is going up or going down. Now, this is also known as dollar cost averaging. So she told me that if the market goes down, she will dollar cost average down and get to accumulate more. So she's happy that the market goes down. And if the market goes up, she doesn't feel like she's missing out at all because she's still buying the way up. So what happens is that it takes emotion out of the game, right? So she just need to fix a certain amount of money she's going to invest every month, and she will just invest no matter what. So she was one of the first person to convince me that time in the market always wins timing the market. And this is something my friend Ken from Chicken Genius Singapore did as well. He told us that he was actually dollar cost averaging to Tesla way back in 2017 and 2008 or 2018. I can't remember the exact date. And this was even before his channel blew up. And Tesla had a roller coaster ride, at some point dropping 60%. I remember that there was a point where I trusted him in 2018. I bought Tesla and then it fell 50% right after I bought it. And of course, I did a mistake. I sold it. If I didn't sell that, that would easily be a few $1 million in portfolio for me. Now, of course, for him, he was just dollar cost averaging, even though Tesla was dropping 50%, 60%. He didn't sell, and he just kept adding and kept adding and kept adding. And today, he is a multimillionaire. If you follow his channel, you will know that he turned his 6 figures portfolio to well over $5 to even $6 million right now. Not 100% sure of the exact numbers for now, but I know that it was easily a mid-7 figure sum of money, which is pretty amazing considering the fact that it was only the past couple of years. There's also this very famous article called "Even God Couldn't Beat Dollar Cost Averaging." And basically it's an article that's talking about how if over 40 years, if you can just invest a fixed amount of money every month, which is dollar cost averaging, into the stock market, versus trying to time the market and buy at every lowest dip ever. But the point of that article is that no one can predict where is the lowest dip in the market consistently for 40 years. Only God can. But from the article, it actually shows that dollar cost average will generate more returns than trying to buy at every lowest dip, which means that if you just systematically set aside a sum of money to invest in something you know in the inevitable, you know that it's surely going to happen, that it's going to mature, you just keep adding money every month, doesn't matter whether it's going up or doesn't matter whether it's going down, you actually make more returns than someone who is a god that can predict at the lowest dip and buy in at the lowest dip of every single dip. Now, I'll put the article up here and in the description below. It is a good read if you have time. So now that you know about dollar cost averaging, what is my strategy now? Ever since my friend told me about dollar cost averaging, I've been setting aside about 80% of my income every month to invest in the stock market and also into the crypto market. Now, 80% is pretty high for me because my income has grew and I didn't want to, have lifestyle inflation and start spending all kinds of money. So I actually set up more and more money to invest. But when I first started out, it was only 20%, right? So of course, the 20% start to grow into 30, 50, and now at 80% of my income. So you don't have to start at 80%, right? If you make a certain amount of income, right, try to set aside at least 10% to 20% every single month. So if you make $5,000 a month, at least set aside $1,000 a month, which is 20%, and invest into something you know surely is going to happen. In this case, I'm talking about cryptocurrency because I believe that cryptocurrency, once again, are here to stay. So every month, I'm just buying more Bitcoin and other altcoins, which I'll be sharing on later. And I highly appreciate that you can give me a thumbs up for this video right now for me to share those coins. Now, if the market were to go down even further, good. I still get a chance to get them cheaper. And if the market were to go up, then, I am still buying up so I don't actually miss out. So this is the reason why I'm secretly hoping that the crypto market continue to stay right where it is longer, because the longer it stays here, the more I can accumulate before the next run. However, once the market starts going up again, and at some point I feel that the market is overhyped again, I will not sell anything, just that I may stop buying more and proceed with caution, just like I did a few months ago. So I will continue dollar cost average until a point where everybody is talking about it again, everyone is talking about it on Facebook, everyone is talking about it on Twitter and trending, and my friends' parents are asking how to buy Bitcoin again. I will stop dollar cost averaging and I'll just take a pause for a couple of months and see how it goes. And if that happens, I will probably do a video and update you about it. So what is my portfolio right now? For full transparency, 50% of my portfolio is still in Bitcoin. And I've shared this before in one of my previous videos, why Bitcoin versus Ethereum. I prefer safety over massive gain, and I personally think that Bitcoin still has a long way to go. Now, of course, it's not as exciting because it's the first, sort of the first blockchain. It is the oldest technology, and there's a lot more projects right now that really look so much more exciting. So it's definitely not as exciting, but it has certain safety now because big companies, big institutions are buying into it. You see, if you think about it, if you are a fund manager, right, managing a huge pension fund, for example, and you choose to finally invest in cryptocurrency, you will not invest in something that's super high risk, right? Because you are investing this money, you're investing pension funds, you're investing other people's money. Or if you're a big CFO of a listed company, right, you won't take unnecessary risk like that. So usually the route they will take is to invest in something that is big and pretty safe, where other institutional investors are also investing in. Therefore, the chances of it going zero is pretty low. And this is what you call investing in the FANGs of crypto. FANGs basically represents what's in the stock market. It represents Facebook, Amazon, Apple, Netflix, Google. These are some of the biggest companies that kind of like have the biggest amount of growth over the last 10 years. So the whole idea is to find the FANGs of crypto. And these are usually the safer ones. Bitcoin is definitely one of them. Chances of it going to zero is really hard now. So I'm basically going to park a sum of money that I believe will be the FANGs of crypto. I know that there are a lot of 100x coins out there, but the chances of you losing money is also very high. I'm also going to add more Ethereum right now. I've recently changed my mind about Ethereum because just like Bitcoin, it also has big institutions looking at Ethereum. So that's one of the reasons why I'm also starting to buy Ethereum. I'm also starting to pick up more Cardano. I personally feel that Cardano will be like more for the retail investors when it comes to the future of DeFi, while Ethereum will be more for big institution because of the high gas fee. Only big institution can afford those gas fee. I'm also going to be buying more into Binance Coin. Binance now is the largest cryptocurrency exchange, and I personally like how the founder is running it. He's very active, very focused on customer support, and constantly innovating. Although there are some news of regulation problems with Binance, but some of it is just pure, fear, uncertainty, and doubt. I think that the reward outweighs the risk long term. I'm also currently studying. I haven't owned any, but I'm looking at Nano Coin, where Ken from Chicken Genius is now promoting highly. I haven't bought into any of that because I'm still reading up more and understand more. And if I were to do that, I will let you guys know. So that's it. These are the few boring coins that everybody probably already know, and I believe that will be the next FANG. But I still believe they have a good 10-20x opportunity, and with a relatively good safety of margin because a lot of big institutional investors are in or looking at it. Now, as for Bunny, from my previous video, I've told you guys that Bunny is really just like a side gamble, right? I'm only buying what I can afford to lose. So I hope that you guys, when you guys buy it, you all didn't buy it, with money you can afford to lose, right? I already told you guys, do your own research. Do not buy into anything that you have not done your own research and something that you cannot afford to lose. So I'm still holding it, but I'm no longer adding more. Now, one of the reasons is because I can't figure out on Bunny website why the market cap is about 100 million to 200 million, but on other sites like Coin Market Cap is only about $9 million. After the flash node attack, I thought this would be sorted out, but it hasn't been, and I can't seem to find good information on how many bunnies are circulating in the market or which website can I really trust. But I still believe in the Bunnies team. I'm still following them very heavily on Twitter, and they are still doing a lot of stuff since the flash node attack to recover the price, and a lot of internal projects and things they are launching out. But the price isn't recovering generally due to the whole market rather than the project itself. So while I'm not adding more due to that reason, I'm still going to hold on to what I've bought, as I believe that it will still make a comeback in the next run. So that's it. That's all I have for you in this video. And the summary here is that when the market is quiet, that's usually a good sign to buy and accumulate more before all the hype comes back. And the second one is dollar cost average, right? Invest systematically without emotion, invest with habit, set aside an amount of money, usually about 10% of your income every month, and just invest into something that you believe will happen, and no matter what's the short-term price, as long as you focus on the long term. So do you agree? Do you not agree? Let me know in the comment section. And if you have any questions, let me know in the comment section as well. I'll be replying every single one of them. Don't forget to like and consider subscribing to my channel. So that's all I have for you today. Bye for now.